Guntram, Wolff, let's talk about the European Central Bank's decision on Thursday to cut its main interbank lending rate down to 0.25%. It was a move that shocked many. There were surprise reactions across the board. The euro fell sharply on the news. The German government's bond futures rose. What was your reaction? Were you yourself surprised?
Well, I think the market was clearly surprised by the rate cut and has taken it very positively. So, as you say, the rates have come down, the exchange rate has come down, stock markets have been up. So, I think it's really something of a positive surprise for the Eurozone and for the Eurozone economy. Now, I think, the markets were surprised, and in a sense, I was also surprised. I thought there would be again, let's say, an accommodative bias, but not a clear decision.
Germany's Bundesbank said that the rate cut will have little economic impact. Will that be true everywhere? Will it be true for the core of the Eurozone as well as the periphery?
Yeah, I think it's a big question how much a rate cut will really achieve. I mean, a rate cut certainly has a positive effect on the Eurozone economy via the exchange rate, and I think that's an important channel. So the exchange rate is supported by the rate cut. I mean, it's getting weaker, and that will help the southern periphery, and it will help also the core of the Eurozone to grow more and to export more. Now, the effect on the exchange rate may not be that big, but at least it will give a little bit of relief. Now, in terms of the funding conditions, I think it will have relatively little impact. I mean, the funding conditions for banks in Southern Europe will improve, but this will not be put through to the real economy. So basically, it will be good for the banks in Southern Europe. But the real economy, the corporations and so on, they will hardly get better credit conditions because basically we still have a lot of problems in the banking system. At the same time, it will help the banks to re-establish their balance sheet because funding costs are coming down. Now, in the core, the interest rate is already very low, well below the official ECB rate, and in that sense, there will be relatively little impact on lending in the core of the Eurozone.
Now, the ECB is currently on the verge of hitting its zero lower bound, but Mr. Draghi did say that the Eurozone would see a prolonged period of low inflation, but that it could use all the tools available in its toolbox to intervene and take action if necessary. What do you think the ECB's future actions might be, and what should and can it do?
Well, first of all, I would say it's clearly the case that inflation rates have come down tremendously since almost 2 years now, and that is really a problem because it is putting the euro at risk of sliding into a deflationary equilibrium, and that clearly has very negative consequences for the debtors of the Eurozone and will make the relative adjustment, the relative price adjustment between the North and the South much, much more difficult. So it's clearly very important to fight deflation and to avoid that we fall into a deflationary trap. Now, there are several measures that you can take. I mean, first of all, there's of course monetary policy measures, but there's also fiscal policy and there's also regulatory policy. On the monetary front, I would argue we probably need additional measures that will bring the exchange rate further down. But I think much more important will be measures that will increase economic growth in Germany. So I would certainly emphasize economic reform, public investment, better conditions for private investment, liberalization of the German economy as key factors to drive up German growth, to drive up, of course, also German inflation, German wages, as a way of adjusting the Eurozone and getting and avoiding a deflationary trap.
What do you think Thursday's rate cut decision by the Governing Council say about the bank's role in the euro crisis and its credibility right now?
Well, I think it was about time for the ECB to do this. The ECB, in my view, should have acted earlier, and it was very reluctant to act earlier because of the very politicized situation in the Eurozone. So I think it's a very good step that the ECB now said clearly there is risk to our mandate of price stability being defined at 2%. we need to act, we need to avoid that we fall into a deflationary trap. I think it's a very good signal and it's clearly warranted. And by the way, at the last rate meeting, there was already a debate about a rate cut. And you may remember that actually the Bundesbank was the institution that was favoring a rate cut, while many others disagreed. And so I think it's really a good move that finally there was a majority for a rate cut.